Good day, ladies and gentlemen. So as promised, I want to teach you the advanced version of the Quasimodo technique. Okay, so basically what the advanced version of the Quasimodo technique is just the Quasimodo in addition to supply and demand zone. Okay, so you're trying to combine supply and demand trading strategy with Quasimodo. Okay, so I have a Quasimodo example already on the charts. You can see the movement. Price moved up, met a resistance, moved down, okay, broke the resistance this way, then came down and went below this level right here. You can see that this level is below this one. I use this trend line to show you that the slanty, okay, you can see that the trend line is a slanty one. Okay, so all the criteria are met for our Quasimodo. We just wait for price to come back to the Quasimodo line, then we take our entry. Okay, but the difference now, the one I taught you before, which is just the Quasimodo technique, you'll be looking to enter your trade right on this line in order for the market to go down, which definitely played out, okay, as you can see. But the difference now is, instead of doing just that, you look above to see if you can draw up a supply zone, as I have done already. You can see this ash stuff. This is my supply zone. Okay, so I'll try to take my trade inside of the supply zone instead of the Quasimodo line. All right, because based on my understanding, price will want to come back to the supply zone. So what this basically does for you is that it reduces your drawdown. If you enter the Quasimodo line, you might have a little bit of drawdown before price goes in your favor, but if you take it at the supply zone, it reduces the drawdown you have, so you have little to no drawdown. Okay, so as you can see, if you're taking from the supply zone, you would have entered around here instead of the Quasimodo line, which you would have entered around here, and your account will be in negative for some time before it finally moves in your favor. Okay, but if you're taking it from the supply zone, you just have little to no drawdown and price will just move down in your favor. Okay, so basically that's the difference between the basic Quasimodo technique and the advanced Quasimodo technique. Okay, let me see another example that I've marked out for you. Okay, look at this one. This one was part of the first example I showed you in the other video. Okay, so I was telling you that I'll tell you why this particular price came up to this point, but I did not explain it in the last video because I wanted to reserve it for this particular video. Okay, so the reason is because of this advanced system of having a supply or demand zone, above or below the line. So you can see the supply zone right here. You can see the supply zone right here. So I would have taken my trade around here instead of on the Quasimodo line, and you see the difference. Taking my trade in the supply zone gives me little to no drawdown, whereas if I took it on the Quasimodo line, I would have had a little bit of drawdown, negative balance before price moves in my direction. So something else I just need to tell you is, sometimes price does not come back to the supply zone, so you need to also take that into consideration. Sometimes, even though you draw your supply or your demand zone, price might not necessarily get there. Okay, but most definitely, if it's a Quasimodo system, price will surely get to your Quasimodo line. Yes, it will get to the Quasimodo line, but it might not. So the supply or demand zone system is like a probability. It might happen, it might not happen, but you need to watch out for that also. A system you can use is, you can wait for price to go past the Quasimodo and see if it's going to get to the the supply or demand zone. Then you set a buy stop or sell stop, okay, below or above the price, depending on whether you are selling or you're buying. Okay, so that when price is coming back, it's going to be triggered and then you'll be tapped into the trade. Okay, you place your stop loss above the extent price went to. Let me see if I can quickly explain, if I can quickly show you what I'm trying to say. So price moves up, gets to this line, you are unsure whether or not it will come here. So you did not take your trade yet, then you see price going past and going into this spot. So what you can do, since this is a sell scenario, you can come and place a sell stop somewhere here. What sell stop is going to do for you is, once the price is coming down, it's going to trigger the sell stop. So the price does not have any business going back up. Therefore, you won't be put in negative, as in you won't have drawdown. So when it's triggered here, price starts moving in your favor. Okay, so that sell stop you are placing here, you put what's it called, your stop loss. Now you already know the extent price has gone to. Okay, so you place your stop loss there. All right, then price moves in your favor with little to no drawdown. Okay, so if you are a new viewer, please subscribe and turn on the notification bell. You got any question, feel free to ask me.